Hi everyone, hope you're all doing well, and today we're going to talk about the stock market, as yesterday was another rough day for the stock market. There was a sea of red out there, and because of that kind of going on, I feel like I got a few questions about what's kind of going on, where we're going next, and hopefully this video today kind of covers all that sort of stuff with the stock market. Obviously there was a lot of stocks down, whether it be small caps, big caps, especially Facebook. Facebook had a very rough day yesterday. Very interesting because I've seen a lot of people kind of wanting to get into a lot of these big tech names, and even they are having the pullbacks right now. And Facebook in particular, I mean, it was just a massive outage. I mean, I kind of like went on my phone and I was like, it's not loading, it's just my iPhone, it's terrible. It's kind of got to that point where it's out of contract in 3 months, and I thought it was just doing the classic thing of iPhones when the 3 months are nearly out of contract, we're going to slowly start dying, so you have to go get a new phone, that they always seem to do. And then after a while I was like, this has been going on a long time. So I had a quick search, I was like, Facebook's down, and then Facebook shares as well down like 5% as well on that kind of news that it was down as well. And I was looking at Facebook thinking, that's quite interesting. That's getting quite interesting to talk about if it's a buy. And I actually thought about making a Facebook video itself. So I don't know, do you want to kind of see that maybe? We'll see what you guys say in the comments. But if you could hit the like button. If you're on Patreon, make sure you go watch the new video that's out. We did a live Q&A session on there, so do go check that one out. But we'll get on to what's next for the stock market right now. So first of all, I just want to talk about the situation that we're in and kind of mentality. I think when we are kind of having these days where we go down, I think it is the big test of mentality is when the stock market goes up. The stock market is very easy. You know, you look at your account, you're like, oh, it's absolutely amazing. Look at the money I'm making. Oh, it's such a great thing. But when the stock market starts going down, you know, it does start to test you, going, oh, that stock keeps going down, and it's down again, and it's down again. Especially with a few stocks in particular, like a lot of the small market caps. A lot of the small market caps this year have just been absolutely awful. So it does kind of, it is the big test for the stock market, and why you're successful in the stock market is mentality and patience. You know, it's actually quite easy to do, and the stock market is a great way to make money, but it's actually not really the stock market, you don't really need to have much knowledge into looking into companies, finance, anything like that. You know, it's not really a system that's built on as a long-term investor of actually being quite knowledgeable. It's more, I feel like the stock market is always a test of your mentality more than anything, and I think that's why a lot of people do find the stock market quite tricky. It's very much detaching your emotions from a lot of the companies you invest in. And one thing that I see quite often is if you zoom out of any great stock or the S&P 500, what you'll see is the uptrend. You know, historically, year after year, the stock market goes up. On the long term, the stock market goes up because what happens is you have a company or companies, and they will report earnings, and what happens over a 10-year period, if it's a great company, they grow revenue, they grow profit, and what happens is shareholders or stock prices are rewarded for that, and you'll see the stock market or that stock trend up in share price. Now, that's on a long-term basis. You know, if we talk about 10 years, what you don't see in them 10 years is the little challenges in between. And even though a stock might trend upwards for quite a few years, in that time there'll be points where there'll be a lot of this going on, and there'll be points where it shoots up here, and this is like peak greed. This is where everyone gets carried away. This is where there's a lot of mentality of, oh, the stock market's easy, look at the money I've made on that. Oh, maybe even though I'm up on it a huge amount, maybe I should just carry on buying that. And quite often them sort of times are where we get the peak greed period. And there's also times in that uptrend where you have these, you know, periods where, that was the worst circle I've ever done, periods here where the stock market goes down and it falls off a huge amount, and the peak times of fear, the times where people go, oh, you know, this is it, this is the end of the world, they just keep going lower, when is it stop going to go lower, or maybe I should kind of quit this. You know, in them periods of 10 years where it looks absolutely amazing, there's periods where you get carried away, or if your emotions are too attached to a company, you get carried away. You might get a bit FOMO, a bit greedy, and there's times where we go ultra bearish, there's massive fear out there. And we've seen both of these cases within the last kind of 12 months. You know, right now, we've seen we're in a period where there's a bit more fear out there, the stock market's going down, people testing that mentality, and there's only back probably February time we saw peak FOMO where stocks just kept going up and up, and everyone just kept buying and buying and buying, people going into riskier investments. And we are kind of we are kind of having that alteration now where we've gone from peak greed to peak fear right now, and that's kind of the little adjustment that we're having over the last kind of couple of months at the moment. And at the moment, it is that test. It is that test of have you got what it has to, have you got what you need to make it in the stock market. You know, these are times where you could see some very good buying opportunities, and yeah, I'm seeing a few people. This is why I never kind of get really attached to my stocks or investments. I don't really like to check when I'm up. I don't like to check when I'm down. I just think about where it's going to be in the long term because of this kind of thing, this rotation that can happen from being up so much and then down. You know, if you kind of get caught in that, it really does start to test your mentality. And that's why I don't really get too emotional on if it's up or down. I just kind of think about keep remembering where you are going in the long term. And yeah, that's currently what's going on right now. We are having a bit of a test of, you know, there's a lot of fear out there. So that's where we're at with the stock market. I think that's just a quick recap on where to be on mentality point of view. Now the next up is the S&P 500. So this is where at the moment a lot of gains have come from this year. If you have big tech stocks, if you are investing in the S&P 500, you're probably looking at 2021 going, it's been a very good year because all the S&P 500 stocks have been the best performing stocks, and in particular on the US side of it for me, the S&P 500, the stocks in the S&P 500 have been some of my best performers. The likes of Facebook, for example, Shopify has been pretty good as well, and even Tesla's been going on strong quite recently. And if we have a look at what's gone on with the S&P 500, you can see over a year period, just look at this, how well it's done. It's just been on a massive uptrend. I mean, if we just go from January, we're up 15% right now. And what you'll see down here is recently we've had this little bit of sell-off down here. We are down 5%. Now that 5% does make a massive difference. I'm sure you've probably seen that in your stock market accounts or your brokers over the last few days, that little 5% dip. And as well, that's the S&P 500. The thing is when you're an individual stock picker, what you'll see is if you have, say, a lot of big tech, a lot of less riskier stocks, you're probably down not 5%, you're probably down 7 or 8%. If you have a lot more higher risk stocks, you're probably down 10, 11, 12% in the last few days. And that's a little difference that you would have seen. But just because of that 5% drop in the S&P 500, we've seen a lot more fear out there. But when we look at what the S&P has done over the last year, you can see, okay, we've been on a massive uptrend. When we look at the valuations, it all makes sense. I've been going on about this a long time. I've been saying I don't know how much upside there is left on the S&P 500. You look at the valuation point of view here on a forward PE and look at the run that we've been on. And right now, look at this. We are the highest we've been for a very, very long time. We are nearly talking peak, nearly tech bubble right now. And we are starting to see this little downtrend at the moment. This valuation is starting to catch up. The problem is that we should really be down about here. So we've still got a very big kind of valuation catch up to happen. So when we go back to the S&P 500, this can happen two ways. We have the S&P where it keeps going down and down and down, or we have an S&P where we kind of flatline for a little bit. And if we flatline for a little bit, very much like 2008, we have a 1 year period where the stock market does nothing and valuations catch up. So in my opinion right now, this little drop in the S&P 500 is something that I've been saying for a very long time. We can't keep going up at this sort of rate that we have done. At some point we need to stop going up because the valuations just get too stretched, and the way we stop going up is either by it flatlining, very much like in 2008. In fact, in 2008 we still had a little bit of a drop off in share price as well, or we have a complete drop off. So we either flatline or we drop off, and that's what's going to happen, in my opinion, with a lot of the big tech at the moment. And that's what we're starting to see, and I think that this is something that will happen for a bit of a longer period at the moment, like I've been saying for a long time. A lot of the big tech at the moment, I've not bought any big tech for basically the last kind of 6 months because I've looked at a lot of the valuations and go, you know what, I love Facebook, but realistically, can I buy Facebook at this valuation? Apple, Google, I've looked at them all and gone, I've not bought any for, a good 6 months period because I've looked at them and gone, the valuations are just sky high at the moment. And that's proof of it on the numbers. I'm not this isn't my opinion. I'm putting facts out here of what the valuations are trading at right now, and they are very high. So the S&P 500 is currently now going through a bit of a cycle where it is calming down, and I think this is the start of a flat line or a little bit of a downtrend. We'll see exactly what happens, but I feel like this here has needed this for a little bit, and it has started to happen over the last kind of 2 months. Now the next little bit is the difference here, which is the Russell 2000 and the S&P 600. So these are a lot more smaller market cap stocks, and this is what I've been buying in the last kind of 6 months. This is where a lot of my money's been going. Now, realistically, at the moment, a lot of these small market cap stocks haven't performed as well as the S&P 500, but what has happened differently to the Russell and 2000 and S&P 600 is this. If I go on the Russell 2000, you'll see that we had the run up, but since about the start of the year or February time, what you've seen is the Russell has flatlined. And if you look at the S&P 600, which once again is a lot of small market cap stocks, look at the charts, they're just so similar to the Russell. We've had the little run up, but since we got to February time or March time here, we've flatlined. We've not really done as well as the S&P 500. But the difference is here. The mid caps, you can see, look a lot better when you look at the range that they're trading at. Historically, that's pretty fair. We look at the small caps. Look at the small caps here. The small caps are down at a 15. Now, if we go here, look, crash. One of the lowest points here. Once again, about 2011, one of the lowest points here. The stock market crash in 2008, about one of the lowest points here. Back at the bottom of the tech bubble crash. A lot of the small market caps are down at the lowest valuations they ever go to. And a lot of these are caused by crashes, and we are not in a crash at the moment. So to be down at these sort of valuations in a non-crash environment, I think shows a lot of value. And you look at these small caps compared to these S&P 500 large market caps, look at the difference here. So for me, when I've been buying a lot of these small market caps, sure, at the moment, a lot of these small market caps are underperforming the market in the last 6 months. But like I said, in particular, I'm not really bothered where my investments go in the kind of 6, 12, 24 months period. I'm thinking 2 to 5 years, where do I see that investment going? And I'm positioning myself at the moment about which are the best valuations. And like I show you there, the numbers don't lie. The numbers are shouting out at the moment that a lot of these small market caps are at good valuations and are quite close to historic lows. And the little difference here that you've had with the Russell and the S&P 600 is their valuations have flattened. Their valuations at the moment have already been quite low, but the valuations, because these companies are growing earnings and revenue, their valuations are getting lower and lower, and these are getting better opportunities. The difference that you have over the last 6 months or 12 months is the S&P 500 has just carried on going up, and then valuations are stretched. So this could be, in a few months, the next buying opportunity where you see your stocks at a lot of value. But when I look at the Russell 2000 and the S&P 600, a lot of them stocks have been on a good discount for the last 6 months, and they have flatlined, and their valuations all totally make sense. So when I look at what is the next thing that's going to happen in the stock market, I feel like this could be what the Russell and the S&P has done for the last few months. I look at these, and yesterday the Russell was down as the S&P was down, but at some point I look and think these guys have been flatlining for the last 6-12 months. And when I look at that and you think, okay, the money goes out of the S&P 500, or people are looking where to invest next, I think the Russell and the S&P 600 stand out as the buys, and that's where the money goes, because then valuations are cheap and flatlined. So at the moment I see a lot of rotation from this going into this. At the moment they're both going down, but at some point I think that's where the money goes, and that's why I've been buying them stocks over the last kind of couple of months. And it all goes down to positioning yourself for the next 2 years. Where do you think the next value, where do you think the best opportunities are for the next 2 years? Not where the stocks are going to be for the next month, 3 months, 6 months, 12 months. Don't worry about where them stocks are going down in them period. Position yourself so you make the maximum amount of money in the next kind of 12 months. Is back at like where we were at in March 2020, when a lot of stocks were going down. You had to position yourself in a time where, okay, these stocks might carry on going down for the next few months, but where are these stocks going to go in the next kind of 2 years? If you did that, you are starting to see the rewards, because we are about a year and a half through that, and we are seeing the rewards from that. In that time period, you might have bought the stocks like I did, like a Greggs, for example, and at one point I was down 30% on Greggs. What happened though? Okay, we had 6 months where it went down 30%, but when I position myself for the next 2 years, I'm up 100%. And that's how I position myself as best as I could for where I'll be in the next 2 years, and I got the rewards from that. And now it kind of comes back to like the next kind of market cycle and kind of positioning yourself in where we will be in the next 2 years after this little market reset that we have going on. And that's where I'm thinking about. I'm not too bothered where I'm invested at the moment and where the share prices go. If this carries on happening, I'm not too bothered. My emotions aren't connected to where the stock will be in the next 3 months. I am planning where they will be in the next 2 to 5 years. And very much like that Greg situation where I went down 30%. So what? I'm not bothered where it will be in the next 3 months. I'm not bothered I'm down 30%. What am I going to make in the next 2 to 5 years? And that's the outcome I'm looking at. And yeah, hopefully overall kind of talked about some of the mentality, talked about the S&P 500, a lot of the small market caps and where I'm buying at the moment. But the thing is if this carries on going lower or flatlines, we do see at last some good chances in the big tech to go by, which a lot of us have been waiting on for a while as well, which would be good. So yeah, overall I would not mind if a lot of the stocks at the moment carried on staying flat or going down in this area, because I've not bought any for a while and I would like to anyway. So that's another good thing about the stock market going down. It does create them buying opportunities as well. So yeah, I hope the video was useful anyway. If it was, hit like button. If you're new, subscribe, and I'll see you next video.